problems at Carnival are dragging the entire cruise industry down. But Scott Rothbort says you shouldn't give up the ship on Royal Caribbean. He's here to tell us about it. Welcome, Scott.
Thanks for having me.
All right, so the cruise line stocks, both Carnival and Royal Caribbean, are down for the year because of Carnival's problems. S&P is up. So why should you stick with Royal Caribbean?
Well, as you know, I do a lot of investing and research in the restaurant space. And to me, when you look at Carnival or Caribbean, Royal Caribbean, these are floating restaurants. And if you've ever gone on a cruise, all that you do is you eat, you drink, and you get some entertainment along the way. So these are nothing more than floating restaurants and bars. And I don't think that the demand for cruising is going to go away just because Carnival has had some problems. If anything, what's going to happen is that the demand is going to shift from Carnival to Royal Caribbean. And as a result, when you see a price like Royal Caribbean's come down, even though they still have a very healthy earnings outlook, that tells me that you're getting a quality stock at a cheap price.
Well, right now it's trading at around 11 times 2014 earnings. So you're saying the fundamentals are still there to merit that cheap valuation?
Exactly, exactly. And as a matter of fact, what's happened is over the course of the last few weeks, because of the problems at Carnival, analysts have taken down their estimates for Royal Caribbean, and I think that's going to be a mistake, and eventually they're going to begin to bring those back up.
And they also actually pay a dividend. There's a 1.4% dividend they pay at Royal Caribbean. Is this also why you like it?
Well, they have strong cash flow, and the cash flow is being used for primarily three purposes: to buy back stock, to pay a dividend, but also to reinvest in capital. And the capital is new ships or improving their existing ships. Perhaps if Carnival was taking that cash and putting it back into their ships as efficiently as Royal Caribbean does, then they wouldn't have had some of the problems they've had recently.
Carnival has had a lot of problems recently, from stalled boats in the middle of the Mediterranean to stalled ships in the middle of the Gulf of Mexico. So right now the stock of Royal Caribbean is trading around $33. What's your target?
I would target in the range of 45 to 50. I think I give a bit of a range for that because I think there is some sensitivity to the economy getting better. There's some sensitivity to those earnings expectations being increased, and I think there's some sensitivity to that play that I talked about where people are going to still cruise, but they're going to select other lines over that of Carnival.
All right, we're going to watch. Thanks for coming in, Scott.
Thanks for having me again.
Thank you for watching The Street.